Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. The new abnormal, people, and the adults are, in fact, talking. It's Dan, Nathan, it's Swizzle. It's 11 a.m. on the East Coast, 8 a.m. on the West Coast on Tuesday, July 21st. A very happy birthday. Dan, Nathan wouldn't say it, but if you look behind him, you'll see a picture of his two daughters. That's when they were a lot younger. Today is Alex Nathan's birthday. So happy birthday, Alex.
You're the man. 23 years old. Pretty fascinating. And it makes me tear. But thank you, Guy. And by the way, the new abnormal, the adults are talking, that would be from the Strokes 2020 album. That is a huge, Alex and I saw the Strokes in 2021 at Irving Plaza, which was super cool. First time she had seen them. Great band. So the new abnormal, go buy it, kids. Go down to your local Tower Records, or Guy, where do you get your records? Where do you?
Yeah, I mean, Tower Records is obviously the place to do it. And as I said earlier, I mean, Julian Casablancas is just a genius that nobody's ever heard of. So
yeah, he's a total stud.
And by the way, you know, the Killers, the Strokes, you know, all those similar genre of music.
No doubt. These are bands that came of age during the 2000s. What do you call it? Was that the aughts? What is that?
Yeah, that's what I say, the aughts.
I don't like that word. Guy, we got a lot of stuff. I mean, listen, I saw something strange today, and it's just that the folks that are paid to just kind of wing these stocks around. I mean, what's going on in the semis and the memory names is truly astounding here. And, the back and forth, we talked about it with software. We're getting into earnings. Google tomorrow night is going to be interesting. Maybe Amanda can throw this up. These are two, I'm kind of fascinated with these two ETFs. This is the MAGS. Okay. This is the MAG 7. And then look at the DRAM. This is the DRAM. And you see what's going on right here. And that looks fairly constructive, Guy, if you think about it this way. But this one looks like it wants to what, Guy?
Well, you're going to say it looks like it wants to party. I'm not in that camp of partying, but yeah.
Amanda, just draw us a downtrend from that $80 level. Maybe that Guy saw that.
I see what you see, Biatch. I mean, it's a downtrend that's probably been broken. Okay. But I also see, by the way,
attach those points, please.
I also see the little island reversal ahead of that. So if Amanda there you go.
Yeah, but Guy, I mean, the way I'm thinking about that is like that island reversal. You absolutely nailed it. It was a huge gap lower, but obviously you had a retest of those highs. But then look at the series of lower highs and lower lows, and you had that huge day. I don't know, Amanda, if you can put the volume up there. So this was 3 trading days ago. This would have been Friday, Guy. You saw where the ETF opened, and you saw it made a lower low, but it closed. That thing ripped. Yesterday's price action, not great. Gap today, above that downtrend. I mean, to me, that thing, it looks like it wants to
party. Okay, so that's the DRAM chart. Let's throw up a Micron chart because we've actually done a decent job here, if I may. So we had been saying for a while, you need a little longer term, that the prior all-time high, if you go back and look, that we made back, I want to say in May, was about 805 or thereabouts. Look at where we just traded down to. So we had actually flagged that and said, there's going to be your support. And basically, as Carter would say, to the penny. And now we're bouncing. But as Dan led the show off after the Strokes thing, this is not normal. Now, today is a day where Micron happens to be up 9.5%. But there have been days where it's been down 9.5%. So when you have 2 or 3 days a week of moves like this, both to the upside and the downside, there's nothing healthy about that, in my humble opinion.
Yeah, I mean, I get it. I mean, that's why I'm mesmerized by a Guy on a day-to-day basis. But like, just look at some of the moves that we're seeing, like you said, in the single names. I mean, this stock, Micron's up nearly 10%. SanDisk is up 11%. Seagate's up 10%. Western Digital up 12%. I mean, and it is interesting to me that NVIDIA can't really get out of its own way of late. And that's obviously a huge contributor to the SMH. Taiwan Semi, that they had a good print and some good commentary. I think, as we get into earnings season, I think you should expect nothing other than that, right? As you think about semis, semi equipment, and manufacturers, like TSM. So again, I don't really have much more to add on this front. I mean, like it's just like if you're a trader, maybe it's great, maybe it's not, because you can't basically take positions out. We're not seeing a lot of great follow through even on these downtrends. I mean, tighten this thing up a little bit on the SMH. I mean, you're having one day one way, the other day the next, and look at that. I mean, you're just getting chopped up, I think, to some degree.
Well, it's hard to explain.
Oh, Jesus. That's a great. That's a great early stroke song, by the way.
See what I did there. We have a question from Eric. BC 1611. Is the S&P ever going to break out of this range? I mean, that's basically what the question. Of course, I mean, we know the answer is yes. Now, if you were to look at this and didn't know what it was, you could say, you know what, that's a little bit of a flag formation, and we're getting set for the next leg higher. You can make that argument. I'm not going to sort of sit here and say that's not reasonable. I still look at that gap to the downside, and I look at all the other things that are happening. And by the way, I read something today about all the debt these companies have, but all the off-balance sheet debt that they're not talking about is a astronomical number. Some people think it's north of $1.5 trillion of debt that they're just not basically talking about. So I bring that up in the context of rates going higher. The market and the economy is not set up for rates going higher. And here you have a day, if you want to throw up a TLT chart, we've bounced a little bit off the lows we made earlier today. But again, TLT below 84, 10-year yields probably straddling 4.6%, 30-year yields higher. This is no bueno, Dan Nathan.
Yeah, and I think the yield thing might be death by, I don't know, 1,000 cuts. No, I mean, your point is, and you've been fairly steadfast in this, that you think you're going to see rates back towards that 5% in the 10-year, and even if it does it like one step forward, two back, at 3 basis points at a time. I mean, that is possibly the sort of thing. I don't think, Guy, and we talked about it a little bit last night, I don't think imposing 50% tariffs on a bunch of stuff to our second largest trading partner that happens to be, in our, on our northern border makes a lot of sense. By the way, I did rip it off from you last night. I did not attribute it to you, but last night when we were talking about these tariffs on fast money, you said, the hockey stick thing. You're like, I mean, they put 50% tariffs on hockey sticks. And I was on MS Now this morning. And when Steph came to me, I definitely said what I'm most concerned about is, I mean, listen, I mean, what do they say? Like, is the best form of flattery, imitation?
Imitation.
Yeah.
That's fine. I'm all for. By the way, I'm all.
Does that annoy you a little bit?
No, not in the slightest.
Are you sure?
By the way, are you a fan of the Allman? No. Are you a fan of the Allman Brothers?
I am.
Well, the late Dickie Betts obviously was a member of the Allman Brothers, but of no relation, Richard Betts.
Oh yeah.
Yes, we have a standing table that will come out at 11:45 today. Richard Betts and Jeff Bell. So that was a fun one because we did it at a really sort of a place far too cool for G Swizzle to go to. Yet I was there, Dan.
Yeah, so it was Speakeasy called PDT. It's in the East Village. Jeff Bell is the proprietor of that fine institution. He's a good buddy of mine. And then Richard Betts is the former master somm. And we're going to talk to both of those guys about their careers and how they got to where they are and, the business of actually liquor. So Richard makes Como's Tequila, which is one of my favorite. It is my favorite luxury tequila. So we go deep on that. And they're just fun, cool guys. Guy was, like one of these things is not like the other a little bit. Is that fair?
Well, it's one thing to talk about it. It's another thing to actually see a clip of it. So
yeah. Oh, do you want to see the clip? Let's do it. Let's run the clip. Let's do it. Living in New York, I feel like we deserve to have access to like cool things like PDT and Steca opens or whatever. Yeah. But as soon as the kids get on it with the Instagram, there's lines out the door.
Yeah. I think it's a double-edged sword. You want to make pretty drinks, a nice garnish, and so you don't want to shoot yourself in the foot, but I also think you don't want to chase.
You have to work at the intersection of your enthusiasms and opportunity. And where those two curves meet, that's where you should spend your time.
When you're creating something, if you have the mindset that it's going to be successful, likely might not be.
Right.
You have to feel uncomfortable that it might not land because that means you're doing something different and you're taking a swing.
You go to the bar, do you start drinking pastis? You drink Macallan. It makes
you dance with the girl you brought to the prom, baby.
Exactly.
Some
What?
guy walks in here.
Oh, geez. A guy walks into a bar. That's what you're gonna do. Like, seriously.
92% of the world will choose unhappiness over uncertainty.
Here's to the 8%.
There you
Thanks,
go.
guys.
Cheers, guys. Thanks.
I also love that you called it the Instagram. You
That's what guy calls it, the Instagram.
We did some math there. So 92% of the people choose unhappiness over uncertainty. I said, well, here's to the 8%.
I love that quote. I haven't, it's not something I had heard before, but great guys, great conversation. That's going to premiere at 11:45. So if you're here with us, you like what we do, enjoy that, share it, rate it, review it. That's how people find a Guy Adami.
Yeah, well, they do. By the way, a couple things. You notice that I was in a suit and tie there. Those cats were in hoodies and all tatted up. Dan was dressed pretty cool. So, but that's what I do. I'm a geek.
I don't have.
Why can't Dan wear a suit on standing table? Guy does. That's a fair question by @_Arkle 7.
I have two suits. Two suits, and one is like a bluish sort of situation. I might wear that to some sort of, business sort of thing, or like a bar mitzvah or a wedding. And then I have a gray suit, a dark gray suit that I wear sadly to funerals. So that's it. I have two suits. That's it.
That's fair. By the way, you talked about discovery. That's how people find us. Well, a lot of people have found the Jim Chanos episode north of, I think, 150,000 views, which is a staggering number on the YouTube. So check out the Jim Chanos podcast that we did, dropped yesterday. People seem to enjoy it.
Yeah,
so
well,
I enjoyed it.
I think what was really great about that podcast, other than Jim just being a genius, we went deep on just kind of some of the economics as it relates to, the data center build. And he's been very skeptical of that. But, the debt thing that you referenced, AI debt, Doug Cass shared it with us, and it was a tweet, and maybe Amanda can kind of bring it up here. So the issue that I see, and we talked about it on the podcast.
That's the one.
Yeah, and this gentleman is talking about it. What's fascinating is, and we've said this 100 times over the last sort of year or so, is that these companies, these hyperscalers, they're using most of their free cash flow to build out, this infrastructure, and now they're raising equity, they're raising debt, that sort of thing. They don't want to hold this debt on their balance sheet. This new data center that there's two new ones actually that Meta is building. They end up owning 20% of the data center, which seems kind of odd to me. If this is such a great use of their cash flow, you know what I mean, and a great use of their balance sheet, and they have such optimism about the ability to monetize it going forward, wouldn't you think they'd want to own all of it, Guy?
If you were that enthusiastic about the future of all of this, you would think absolutely you'd want to own it all, because it becomes an asset. It's not a liability. But what I think they're telling you is this is in fact a liability. I don't know how to read all this, but what I'll tell you is people will say it's different this time. But if you look at the way Oracle's trading, if you look at the way some of these private equity names have traded, if you look at interest rates, what's going on, not only here in the United States, but globally, all of this doesn't add up to, as they say, a healthy situation. So I don't know what to tell you, but this is all going to come home to roost at some point. And it's just going to take, again, my opinion, one of these hyperscalers to say, you know what, they're cutting back. Or the flip side of the coin is margin deterioration from an NVIDIA or something, and then the genie's out of the bottle.
Well, you want to talk about margin deterioration. We've been discussing this a little bit, but I just want to highlight it because Google is reporting tomorrow night after the close. I mean, this is a company, and you did a nice job. You surrounded the trade on the
I tried to do this.
What do we call it? It's the overtime. Is that what we're calling it?
Closing bell, CBOT, I think they call it. Closing bell overtime.
The CBOT is the Chicago Board of Trade.
No, I understand this.
Okay.
I'm just you asked me what they called it, and I'm just telling you. I'm not saying they should call it that.
So just riddle me this, Batman. Okay.
By the way, I know you didn't grow up in the era of Batman, but the genius of Batman, I don't even think you can't overemphasize just the brilliance of Adam West.
Who did you have a bigger crush on? Did you have it? It was on Batwoman or
Batgirl.
Batgirl or Catwoman? Which
Catwoman was Catwoman. That was Eartha Kitt, I believe, played Catwoman.
All right, so Jacob, can we get eyes?
Me.
Can we split them up? We need eyes on Catwoman and Batgirl because
there were a couple different Cat girls.
Yeah.
There was just one Batwoman. And Batwoman on Batman. See, the thing I tell people, it's about scarcity. And every sort of 6th or 7th episode, Batwoman would show up on Batman. And that made it interesting on her little motorcycle.
Yeah.
Like,
I mean, I like what's going on over there. Is this trying to show us that she was in disguise? So that was her as like a secretary or something like that?
Well, no, you know something. Again, we really powered through some things last week, and then you go right back to it. Why? Maybe she's an attorney. Maybe she's the general counsel of a large law firm.
No, not in the late 60s.
That's Commissioner Gordon's daughter, by the way.
We all saw Mad
Commissioner
Men.
Gordon's daughter. And even Commissioner Gordon didn't know it was her.
Can we get Catwoman? Can we get eyes on Catwoman, Jacob, here? Because I think this one is interesting. And Guy, you call me out. I mean,
I'm not calling you out. I'm trying to help. I don't,
Listen, if we go back to Mad Men, there's this amazing scene. Those are all the Catwoman. Anne Hathaway. All right, who's your favorite Catwoman?
No, it's like we did this yesterday. You got mad at
Michelle
me.
Pfeiffer. Remember Michelle Pfeiffer? And we also had Halle Berry, and we also had Anne Hathaway. I would say the original, the OG, is probably my favorite for all intents and purposes. No?
You got mad at me yesterday because you came on in the commercial break and you said that the guy, this cat that just did The Odyssey,
Christopher Nolan,
has never made a bad movie. And then somebody said, well, what about the Bat whatever? And you said, oh my God, they're the greatest movies ever.
They're easily the trilogy, the Dark Knight trilogy is easily the best superhero movies that have ever existed. I'm just going to tell you that right now. So maybe maybe you go back and rewatch them, Guy. Hey, let's go back to Google for a second.
Sorry,
here, okay?
I don't know how we got here, but yeah.
So I love those lines that we drew, by the way. I mean, that's just pretty dope.
Lines draw themselves, Dan.
They do. So expected earnings growth, in this quarter is expected to be 14% year over year. As far as 2026 is concerned, that is expected to be the only quarter that has double-digit growth, and for the year, that puts them about 12% year over year for earnings growth. 2027 expected to decelerate to 8% and then reaccelerate in 28 to 20%. Now your guess is as good as mine about 2028, right? But you see what's going on, as far as revenue growth, though, this year expected to be 25%, next year 20%, and the year after that 2028 20%. But here's the kicker, and this is what you were just talking about, and this is how why we're talking about this is margins. So gross margins 2025 were 70%. This year expected to be 70.5%. Good on you. Next year, 66.6%. That's a huge drop if you just think about it, right? And so that's why you see that, obviously, that dip in profitability, but it also speaks to the spend. So I guess, Guy, what I'm going to turn around to you is that if this company is able to talk about their search business, their YouTube business, their TPU business, their GCP business, which is their Google Cloud business, which last quarter grew 63% year over year relative to, I think, about 40% for Azure and 23 or 24%. I'm just going off of memory here, so I might be off a few percent either. So GCP is growing the fastest. Now it's a smaller business for them, but if you just think about all of that and then just kind of the models, Gemini, right, and the like, this is the company that is, to your point, you've been talking about valuation at 23 times. It seems pretty reasonable, I guess, you know what I mean, to the market, that sort of thing. This is the one that you can make the best case for. That's it.
I think so. And I'm not suggesting I'm right, by the way, because a lot of people want to punch holes in the Google story. And remember, as I said this yesterday on the CBOT, it was a year and a half ago where there were people talking about the existential risks that Google faced in terms of AI in their search business, which scared some people. I mean, Google was under pressure on the back of that. And then subsequently, we've had 6 quarters where we haven't seen hide nor hair of that. Now, it's not to say that it can't happen at some point, but there's no indication that it will. And there are a lot of people that do back of the envelope math and say, you want to break up Google, which has been thrown around over the years. I don't think it's going to happen. I want to be clear, but some of the parts type of thing, and it gets you to a much higher level. Now, I think, not that it matters, but I think the average price target, according to FactSet, by the way, FactSet is the data provider of risk reversal media. As you know, I think the average price target of the 72 analysts, think about that. That's probably the entirety of the analyst community, it's about $437 or so. So it's obviously significantly higher. Again, doesn't mean that they're going to be right. But when you throw it all into the mix, valuation is not ridiculous. I think it's reasonable given some of the metrics you just cited. So I sort of like Google, but I'll also say, and I said this as well, it's amazing to me that this is a $4 trillion company. Just the volatility in this name over the last year or so, it's, again, staggering. It's not normal, Nathan.
Yeah, and so the point I was going to make on the margin front is that if this is a company that were to dial back, let's call it the next, year and a half of CapEx, because they basically could tell a story that they're into the monetization phase and they're seeing, whether it is the end of token maxing and charging, by token and that sort of thing, but that's where they're going to get the leverage in their model, and they're able to guide, margins below that sort of deceleration. Well, that's the sort of thing that would get this stock on the way to 437. 72 analysts who cover it, 66 cover to buy, and 400 and what was the all-time high that we just saw there? 400 and change, 400 and, I don't know.
All-time high in the Goog, I want to say was it 408? Is that right, or am I off?
410-ish or something like that.
I don't know.
And we'll take another look at it today. Guy, you want to hit some names away from tech that reported this morning? Let's start with GM. Do you want to do GM?
Comes out here? GM.
Comes out GM. Look at you. General Motors.
That's what we used to say on the trading desk. Comes out.
Yeah. But that one we kind of figured out, like IBM, you don't have to say it comes out IBM. You would say that, like, Schlumberger comes out SLB, Slav, and that's how it got that nickname.
We're fielding calls, and International Business Machines come out IBM, seller in. We have indicated buyers trying to put together a trade here. Let us know if you're interested.
Okay.
That's GM, some of the language of the trading.
This is one of the things, and this can bring us back a little bit to the tariffs with Canada. And this is one of the flashpoints going back to, the tariff rollout in April of 2025. I mean, auto parts, are an important component to making autos, right? Could we agree on that?
Auto parts are an important component to making autos. Did you just say that?
Can we agree on that? That's what I wanted to know. Can we agree on that?
No, we can absolutely agree. I'm not going to push back on that. Auto parts are important to making autos.
So if GM is importing, let's say 10% of their auto parts to make their autos here in the US, and even at 10%, I mean, there is, some sort of marginal cost increase, right? I mean, they're not going to eat all of that. That's something that, maybe it's unnecessary. I don't know. Dairy products is one of the same things. But, going back to GM, I mean, this thing, I think Carter would call it a pair of twos. It's sitting on that rising 200-day moving average. Anything there that you find particularly interesting?
Yeah,
from a fundamental
actually, look, I thought the quarter was actually pretty good, and the guidance was good, and they talked about the resilience of the consumer, which, again, I take them at their word. But, it made it this, by the way, this is the second iteration of General Motors, so I want to be clear. But the stock made an all-time high, I think, in February at 87. We sold off. We're trading sideways. I look at this and I say, we're starting to sort of build a base for the next leg higher. So I actually think, given what you heard, and given the fact that we sort of bouncing off the 200-day, I think you can own General Motors here.
Yeah,
that's me. I'd rather own GM than Ford. Let's put it that way.
Yeah. So on the resiliency front of the consumer, I mean, that is
their words, not mine.
I know, but that is what the takeaway was, a big takeaway, I think, from the bank earnings last week. I mean, it's hard to kind of, and, I heard somebody, I can't remember who it was, maybe an economist or something like that. You got to really separate what you see and what you hear about consumer sentiment in some of these readings, right? And relative to what we're seeing as far as just, consumer behavior. I think there is a gap. There's a lot of sunlight between those two things. So at the end of the day, and some of the things are political, I mean, some people are going to basically, feel negative or really positive about the, the economy based on, like kind of who they're in favor of. Like, it's one of those things that you can't put your finger on. What about this one? I mean, this is a name I don't think a whole heck of a lot about. Look at Triple M. They reported this morning, Guy. It's up 9%. That's a big move, and it's trading, right near those prior 52-week highs.
I saw the Squawk Box this morning, and Joe Kernan threw to Dominic Chu to talk about the Triple M. And You got to remember, I mean, this stock was left for dead in late 2023. I mean, nobody was talking about it. And subsequently, it's gotten itself a little bit off the mat here. But you have to say, is this sort of the quarter where it exhausts itself? Valuation is a little stretched here, Dan, in my opinion. You've had a decent run. Obviously, today you're having a huge run. You're going to get us back to close to the February high, which is about $1.74-ish. I think if you've been fortunate enough to be long this stock, given the amount of volume it's going to trade today, I think it typically trades about 4 million shares-ish. It's probably surpassed that already. I think this is a name you want to sort of reap some. You got to take some profit. You got to take the money and run on this BST. Remember that?
Yeah.
That was from Wall Street.
Yeah.
We got to take the money and run on this BST.
Yeah.
That's the same guy that said, I'm offering you the Knicks and chicks.
Yeah. So
which is a line that I use to this day. I think it was a hysterical line.
What year did that come out? Like a year or so?
87, I think.
Oh, so the
right?
The market
Hold
crashed.
on. Now I got to look.
No, I know you got to look.
No.
That movie, we've seen a lot of stuff over the years,
1987. Wow. Nailed that.
What date? Like what month did it come out?
October
was,
please. Wall Street, December 11th, 1987.
The timing of that after the October crash is pretty fascinating. It's also the year that Guy Adami entered Wall Street.
No, I started in 1986.
Okay, but let me ask you this. I obviously was in high school during 86. What was it like having, did you guys just repeat those lines again and again and again? Knicks and chicks, Knicks and, I mean, I'm being serious.
No, the Knicks and chicks thing was hysterical. Lunches for wimps, I think, is one of the lines from that movie.
Yeah.
You want a friend, buy a dog is something that to this day,
yeah,
I will say. I mean, one of the great characters in cinematic history is Gordon Gekko. Say what you want, but I mean, Michael Douglas crushed it.
But the timing of that movie after, I have to assume that the crash in October of 87 was one of the things that put the stock market back on people's radars.
Timing was perfect.
Yeah, and the fact that now you had what was meant to be, I'm sure there's a lot of people who don't know much about the stock market or the apparatus of how it works, of Wall Street in general. They looked at that and they're like, holy shit, that's what goes on. You know what I mean? I'm entrusting these people with my money.
These animals. By the way, I'm going to ask Jacob to try to find something. I think if you go to Facebook, we did when on the 50th or the 40th anniversary, I guess it was. Yeah. The 40th anniversary of the movie, we did our own trailer of the movie Wall Street. And when I say we, the cast members of Fast Money.
Do you know who wouldn't participate in that?
You.
Yeah.
And if Jacob can find it, it's less than 2 minutes. It's absolutely brilliant. And if you remember in the original movie, Gordon Gekko had a shirt with stripes, except they were not vertical stripes. They were horizontal stripes. Horrible. And I had a shirt just like that I wore for that. Of course, just so spoiler alert, I played the role of Gordon Gekko in the trailer. Tim Seymour played the role of Bud Fox.
All right.
Just telling you, if we can find that, it is.
While Jacob is efforting it,
brilliant.
Let's talk about Schwab right here, Guy. So they reported this morning, stocks basically unchanged. It's a stone's throw away from those prior highs. It is interesting how hard that stock got hit going back to the start of this war, right? It was basically trading at all-time highs. The quarter looked really good. I mean, I just want to throw some of these metrics out there. So revenue was up 21% year over year. EPS was up 4.5%. Pre-tax margins were up, 52%. Client assets up 22% year over year to $13 trillion. With a T. Trading activity. You guys are going crazy over there. Daily average trades hit a record 12 million. Okay. And net inflows to Schwab Wealth Advisory 80%. Now, it's interesting to see that Schwab is unchanged. Look at Robinhood, Guy, up 8.5%.
Partying.
Yeah. Coinbase up 11%.
That's on the back of yes, and that is in large part due to what's going on in Bitcoin.
Yeah.
But I'm glad you brought up Coinbase real quick, because look at those little lows. I was going to mention this last night if Mel had come to me, and I'm not saying she did anything wrong. She didn't. It's just the way the show works. But we were having a conversation about Bitcoin, and look at the lows in Coinbase. You go all the way back to September of 2024. that sort of 145 level. It's been a low a couple times, and here we are. We've hit it again, and now we're bouncing. So you want to play a little stock market here. I think Coinbase rallies to the 200-day and fails. So there you go.
All right, let me ask you this. Okay,
Please.
so let's, if you were gonna make a short-term trade in the crypto space, would you rather?
Oh, I like this game. Would you
rather buy Coinbase right here? Okay, and I'll look at the the 200-day at 221, and I'd say 245 is that breakdown level when you see that it just kind of fell off a cliff, and earlier this year. Would you rather buy right here, $178 Coinbase, or let's pull up the Bitcoin, or would you rather buy Bitcoin? I think it's trading at 66,000 and change. I'm just curious because last night, this thing looks like it wants to party a little bit too. I made that comment because, I was expressing some bearish sort of sentiment using IBIT and using puts in August. And I closed those yesterday because it looked like this thing wanted to go towards 70. But I kind of feel like Coinbase, because it actually has earnings and cash flows and all that sort of stuff, would be a better way to play it. I'm just saying.
All right, I agree. First of all, I think that's right. So let's play the percentage game. So 66,000 to 81,000 is 1530. Let's call that, what is it, about 29? Yeah. Look at you.
Yeah.
You have the similar percentage move in Coinbase. But I think if you had to pick between the two, which you just tasked me to do, I'd rather own Coinbase here. I think Coinbase, look, I'm not saying they're out of the woods by any stretch, but I think the fact that we traded down to those levels a few times over the last couple of years and a bounce suggests that you got to move in Coinbase to about whatever that level is. 220, is that what I said? 221?
Yeah, exactly. 220. 220, whatever it takes. What
By the way,
movie
great
people?
Michael Keaton.
Why don't we start having people just kind of answer those questions? We can't just be Doug Cass, who's Johnny on the spot with all this stuff, because you can't get anything. You cannot get pop culture like any reference by him.
It's like trying to sneak a fastball by Dave Parker. By the way, you asked for it, we got it. Without further ado,
oh my God,
the cast of Fast Money. In the movie Wall Street. Here you go. Watch this.
In a world,
stock is plummeting,
where you can trade your honor.
Something big is going down. I want to know where he goes and what he sees.
Mr. Gecko, I could lose my license.
For power.
I know this guy's all about greed.
There's no nobility in poverty anymore.
Greed is good. Greed works.
Trade your peace of mind.
Well, what's in it for moi?
More money than you've ever dreamed of.
For a piece of the action.
The richest 1% of this country owns half our country's wealth.
All it takes is a little inside information.
He's using you, kid, and you're too blind to see it.
You may find out one day that when you've had money and lost it, it's much worse than never having had money at all.
Guy Adami.
Why do you need to wreck this company?
Because it's wreckable, all right?
Tim Seymour.
When does it all end? How many yachts can you water ski behind? How much is enough?
Brian Kelly.
I get a strange call from the SEC. They asked to see my records. This is heavy, bud.
David Seaberg.
What you see is a guy who never judged another man's success by the size of his wallet.
A Fast Money film, Wall Street.
It's so good. It really is so good. But I have one comment here.
Please.
There was one instance where Tim and you just were holding it back so hard.
No,
okay.
100%.
Okay. And then the other one is I could only assume that Tim was not happy with Seabag yelling in his face like that, because they were almost tip of the nose to tip of the nose there.
No, but I got to tell you, Seaberg brought it, man. You got to give him props.
Dude, it's really impressive, by the way, because you guys have acting chops. It was something that was really exciting.
You didn't want to participate.
You know what? It's just not my jam. Okay, like
who would have a ball. Who, if you had a?
I would have been Bud Fox's dad. I think that would have been my. But
look at that. Look at that.
What do you think about what I would
see the stripes? By the way, the stripes are horizontal.
Oh, I would have liked to be John C. McKinley's character. I mean, that guy, he was good. He
wore the helmet.
What was his name?
In the movie?
He was in obviously Platoon, which was an Oliver Stone movie, and he was in one more Oliver Stone movie.
I think his name in the movie was like Marvin or something.
He was great.
Terrence Stamp, the great. You mentioned like Batman and Superman, all the movies you like. Terrence Stamp was Sir Larry Wildman.
You know what? All right, what superhero movie was Terrence Stamp in?
Didn't I just tell you he was in the friggin' Superman thing? Do you fucking listen? I mean, honest to God, Amanda, did I just not say that?
I'm sorry.
Holy shit. That's what I mean. You've had some great ones over the years, but this one,
okay.
3 seconds ago, I said that.
All right, can I ask you a question? Wasn't his character put into that glass thing in Superman 1, and then in the beginning of Superman 2, it like breaks because there's some sort of bomb that goes off in the Earth? Isn't that how it happens?
Oh, those movies sucked.
Okay,
so I don't know the answer. All I was saying was that he was in the superhero movie, and then you said 3 seconds later, what wasn't he in what superhero movie was in? Trying to stump me. It's amazing. By the way, we have some comments here from our audience members. Well, but this guy holding the cigar backwards.
I saw that.
Wow. I think I might have been just to sort of mess with people.
I saw that. Hey, do you see?
I love that. That was fun.
It was really good. It was really well done. Let's go back to the markets here because I mean.
By the way, you mentioned Schwab. We have Liz Ann Saunders coming up at some point. Whether it's middle August, we're efforting her right now. She's always a great guest for us on the Risk Reversal podcast. Back to you.
Capital One reported, guy. Do you see the Capital One report?
I did.
Thoughts there?
No, my concern, somewhat unfounded, has been around the consumer and delinquency rates. Capital One's quarter did nothing to change my view, but the stock is basically unchanged on the day. It is. Look, it hasn't been trading particularly well now. I want to say since December-ish, when we made an all-time high. But the fact that it's not getting cratered is somewhat encouraging. I mean, once again, they're saying the consumer's okay. I don't believe it. I see the numbers that come out in terms of delinquency rates. They told a different story today. We'll see how it plays out. But again, I would not be a buyer of Capital One here, in my opinion.
Let's go to Walmart. This is one
WMT.
I am in the camp that this is one of the worst charts in the entire stock market.
And you've been right.
Well, I just want. The only reason I'm just highlighting this because look at Staples today. We're down 1%. If you want to pull up the XLP, this is obviously a huge holding in the XLP. I do think it's interesting that XLP looks very, very different than a Walmart chart. We can agree on that, right? So holding that 200-day,
like a boss,
like a boss. Let's hit a couple more things, guy.
We want to go to energy because
let's do it. Halliburton reported this morning, I think, right?
Comes out HAL.
But that's a proper way to use that.
Yeah, and it's down 5% today. So this is a situation where if you go back and look, Halliburton's traded up to this 43 level in the same way we talked about Coinbase trading down to and bouncing. Is the same way Halliburton is traded up to and failing, and the level is around 43. It started, if you want to go way back, June of 22. They traded up there again in January of 23. It happened again in October of 23. It happened again in March of 24, and it just happened again in May of this year. So you have all these little tops that the market for the stock can't get through for whatever reason. I will tell you, I think you buy the weakness in Halliburton. That's just me.
Let's talk about crude oil then, guy, because this is a situation where we talked a little bit about the war. Neither you or I are foreign policy specialists or anything like that. We were in the camp.
You were a poli-sci major in college at the University of Pennsylvania. No,
I was. You know what? I really. There was a time that I really thought I wanted to work in government and focus on foreign policy and the like, and never happened. And I think some of you guys are probably pretty disappointed about that. But
no.
We'll save that for another podcast. We talked about the complacency that we just thought was just I don't know. It was lazy in many ways. Is that fair to say? And
lazy.
In the crude oil, it really was. And one of the things, and this is. It's just shocking to me. What seems so obvious is that the Iranians were using a ceasefire, using a 60-day sort of moratorium, if you will, to restock like to actually dig out, you know what I mean, some of these missiles and this stuff. And it's just crazy to me. And one of the saddest things, and I said this on a podcast a couple months ago, a really good friend of mine was a Navy pilot. He was in Iraq and Afghanistan, and he was called back. He was in the reserve. So this is going back almost 20 years, okay? And he was still flying for the reserves each month, I think about 10 days or something like that. And he flies for a big airline too. And he literally was called back to Europe. He went to Aviano in Italy, and he was transporting our soldiers into Saudi Arabia and the Middle East. And he had said to me he had never seen the sort of fire that our bases in the Middle East had been taking. And, you know, that's a really scary thing when you think about where we are right now and the casualties. You know, it's just really sad. And you say to yourself, this whole idea of asymmetric warfare, and this is not something, maybe like Vietnam, it was like guerrilla warfare was something that was new to us, if you think about it, going back to, let's say, World War II, right? But this notion that these, and this is going on in Ukraine right now too, is that they can have success, the Iranians, using, you know what I mean, like strategies that are not made for like a hulking sort of military like ours. And, you know, I just want to, you know, so to me, and I want to make another analogy after this, but thoughts here, because if crude oil, as far as WTI is trading at 85 and Brent's trading at about 90, yeah, we could see like a retracement or something like that. But if things are going to retain or can, you know, this sort of volatile, I just don't know where the new floor is, guys. It's not 67. I'll put it
These were Reagan levels in terms of the strategic petroleum reserve, number one. People are not paying close enough attention to the gasoline levels that we have, the gas reserves we have. Yes, as much as people want to say it's about the price of crude, it's all the other things. Your point is well taken. Asymmetric warfare. They being the Iranians, are going to try to drag this out as long as possible. I've been reading about, and this is not political, about munitions depletion in both Israel and the United States, and that's sort of the waiting game that our adversaries have been playing. And I don't know how. I don't work at the Pentagon, and I'm not a four-star general, but I don't think people were envisioning the resilience of what's going on the other side. But if you think about it, they've probably been preparing for exactly what's going on for the last 30 or 40 years. So, yeah, I do think it's problematic. I don't think a VIX at 17 encapsulates some of the risks we're seeing. And I don't think a crude oil price at 84 does either, quite frankly.
Yeah. Again, you know, it'll be interesting to see like if we do start to see some dispersion though between, you know, crude oil and some of these names. Right. And I'm sure you're far more, you know, far more equipped to kind of discuss this, but it is worth noting. And it'll be interesting to see if crude, you know, at 90 starts to weigh on the stock market, because the whole notion of this inflationary reading, or this June inflation number that we got in CPI that was down 0.4 tenths of a percent, that was something that maybe emboldened the administration to throw some more tariffs on,
I agree with
you know,
that.
yeah. And so when you think about this, if a lot of that decrease was oil, you know, like month over month, well, you tell me how hot it's going to be
now.
Yeah. And you know, I just wanted to, and I'm workshopping this, so you tell me what you think of this.
I like when we workshop things.
So we spent some time, or we have been, on the podcast and on Fast Money specifically last night, talking about Moonshot's new Kimi model and Alibaba's Quen model, and how much, you know, these companies have spent as far as CapEx to build these models, and they're innovating because they haven't been able to get our high-end GPUs, and they're spending far less, but the models the models are catching up to our models, that sort of thing, you know. And I made the counter argument last night, and it's not saying I was just kind of playing a little bit of a contrarian on that. You know, one of the things I think is interesting when you think about China, and they're spending, let's say, hundreds of billions of dollars versus our multiple trillions of dollars. Let's go back to 22 to maybe 2030. This is almost asymmetric warfare, guy. If you think about it this way, okay, these guys are basically making do with less. They're looking at us and saying that our companies, our national champions, are spending trillions and trillions of dollars, and they're fighting with each other, trying to get to AGI and superintelligence first, where the Chinese are trying to make good enough that they want to export their open source models to the world. And so that is somewhat asymmetric. Is that fair? Do you 100%. See the analogy that I'm trying to make?
Yeah, I do. And good enough might be good enough. And by the way, you mentioned, I think Alibaba's at 36% shareholder in this moonshot, and they just did around it, I think, $3 billion. Now, I think that's right. Now, think about this. If Anthropic is talking about, $1 trillion valuations, OpenAI, this is a company that's talking about what, they just raised at $3 billion. Either they're way too cheap, which probably is true, or the flip side of the coin is these other companies are way too expensive.
Yeah, no, I think you're.
Is my math off?
No, but I think they last raised.
Oh, they raised $3 billion, but
yeah.
What was the valuation? Oh, $31 billion.
Yeah, but
you see what I'm saying? Still,
here nor there. I mean, it literally is sort of a rounding error on what we are spending for all intents and purposes. We've talked about Alibaba. They've guided to $50 billion in capex over the next 3 years, and we have our companies spending $150 to $200 billion. That's individually, right? So the one point I was going to make, just to finish things off, because we got to go.
We got to go.
We got to go. Is that? Is just they said on the screws. We were not on the screws. Well, let's do this. We'll make the Google points tomorrow as far as capex and margins that just kind of finish it off. So listen, Guy Adami, we appreciate your deep knowledge of the movie industry and pop culture and that sort of thing. But this is kind of pop culture, what we're doing with Standing Table. So people, we'll be back tomorrow. Stick around for the Standing Table. We appreciate you guys taking a look at it. Thank you.